1 week ago, ARK Invest released their new 2025 price targets for Tesla. I will go over their estimated values and assumptions and what this means for you as a current Tesla shareholder or potential investor. What's up everyone? I'm Stevie and I started investing 2 months before the March 2020 crash. I learned a lot of lessons on the way and I want to share them with you because I believe everyone can become a millionaire. Please show your appreciation by always smashing the like button. And make sure to watch until the very end where I will reveal my personal price prediction for 2025. It will surprise you. ARK Invest split up their price prediction into 3 magnitudes. A $1,500 bear case, a $3,000 base case, and a $4,000 bull case. Notice how their base case is much closer to their bull case. 1 year ago, they also made a 5-year out price prediction for Tesla. Their base case was $1,400, taking into account the 5-for-1 stock split in August 2020. It's interesting, because they made this prediction when Tesla was selling for just $128 per share. Almost everyone was calling their price prediction ridiculous. In the meantime, we reached $900 per share, absolutely destroying their $300 per share bear case for 2024, and well on the way to reaching their base case prediction. In this year's price prediction, their base case is twice the size, and this is accounting for just 1 extra year out into the future. So why did ARK Invest upgrade their price target so significantly? First off, by looking at the gross margins, ARK wants to figure out if Tesla's cost of manufacturing vehicles will continue to fall in line with Wright's law. Tesla has increased their automotive gross margins from 21.2% in 2019 to 25.6% in 2020, the best margins in the car manufacturing industry. Last year, ARK was projecting 40% gross margins for 2024. Now they are expecting 50% for 2025. ARK Invest is really bullish on the margins, and their number is much higher than the 30% Elon Musk is striving for. Yes, for a car manufacturer, 50% gross margin is insane. But if we take the insurance and especially the ride-hail revenue into account, this could significantly bump up the numbers, and 50% gross margins becomes more realistic. Second, by looking at capital efficiency, ARK wants to figure out if Tesla will scale their factories capital efficiently. In 2019, their gross capital expenditure per car was $9,200. In 2020, their capex more than doubled. At first sight, this looks bad. However, in 2020, Tesla added Model Y manufacturing in Fremont and Giga Shanghai. They also started building gigafactories in Berlin and Texas, and they started lithium mining in Nevada. Therefore, the 2020 capex is deceiving. In reality, Tesla appears about 5 times more efficient on capex spending per unit of vehicle production than in 2017. Financing for Giga Shanghai was $1.6 billion. Currently, they are at a capacity of 250,000 cars, which translates to a capex of $6,400. In 2021, we can expect about 523,000 units, which gives a capex of $3,059. However, in the future, production will ramp up to 1 million cars per year, which gives us a $1,600 capex. Currently, under construction, Giga Berlin will cost an estimated €4 billion. Tesla stated it would produce 500,000 cars per year to start off. This means the capex is almost $9,400. However, later on the capacity would increase to 2 million cars per year. This means the capex would be about $2,350. Last year, ARK was expecting $11,000 gross capex for 2024. Now they are expecting $6,000 gross capex per car for 2025. As you can see, Giga Berlin's capex will be almost 3 times lower than what ARK is expecting for their bull case in 2025, and Giga Shanghai's capex will be over 4 times lower than what ARK is expecting for their bull case in 2025. Elon Musk understands damn well that efficiency is key. Tesla does this by using the new 4860 battery cells, die-casting the frame in just one piece and reducing the amount of robots necessary to build the cars. Third, ARK wants to figure out if Tesla will successfully launch a fully autonomous taxi service. In ARK's bull case, half of Tesla's revenue comes from selling cars. The other half comes from the autonomous ride-hail revenue. It's clear they are betting big on the autonomous taxi service. We can already see major leaps in Tesla's full self-driving technology. Some previously thought insolvable problems have been solved. Therefore, ARK has increased confidence that Tesla will succeed. They are expecting fully autonomous driving cars to launch in 2021. However, with just 2% of eligible Tesla vehicles on the network in the first year. Tesla would charge $2.5 per mile, a comparable rate to Uber and Lyft. ARK believes over time this would fall to $1 per mile while taking a 50% platform fee. This is much higher than the 20 to 30% cut which Uber and Lyft enjoy today. However, according to leaked information, the cost of the autonomous taxi service would only be 10 cents per mile. At $1 per mile, this would give Tesla a whopping 90% margin. Self-driving cars, of course, need to be approved by the regulators. According to James Dumas' calculations, Tesla would only need 2 to 8 weeks to gather the necessary data to have 95% certainty that full self-driving is at least twice as safe as humans driving a car. It's also interesting to note that if Tesla is successful in launching a fully autonomous taxi service, it would likely make more sense to keep all the cars for the autonomous taxi service instead of selling them, as this would generate about $800,000 over the lifespan of a car instead of a one-time payment of about $50,000. At Battery Day, Elon said that long-term they want to produce about 20 million vehicles per year. In 2020, Tesla produced just shy of 510,000 vehicles. In Tesla's fourth quarter 2020 earnings call, Elon Musk said that he believes Tesla could achieve a growth rate meaningfully above 50% for 2021. If they keep this pace, we can expect 4 million cars produced in 2025. This is in line with the expected production capacity for the Fremont, Giga Shanghai, Giga Berlin, and Giga Texas factories combined. However, if Tesla builds another Gigafactory or expands their current factories, this number could be higher. If they want to reach 10 million cars by 2025, they would need to build 3 more Gigafactories. So I believe ARK Invest is overestimating the amount of cars Tesla can produce by 2025. Now, let's address the elephant in the room. In their conclusion, ARK mentions that they didn't take into account the energy side of the business. Elon Musk himself said that in the long term, Tesla Energy will be the same size as Tesla Automotive. In 2020, their energy business accounted for just 6.3% of total revenue. At Battery Day, Tesla announced they will produce the new tabless batteries in-house, which will alleviate one of the biggest bottlenecks and will help dramatically reduce the investment cost per gigawatt hour by a mind-blowing 69%. In the third and fourth quarter of 2020, energy sales reached record highs. This is just the beginning. Once Tesla is in control of the battery production process, they can really start scaling up their energy business and things are going to explode. I don't mean the batteries. The margins on the solar roofs are slim, but we do know that the margins on the Powerwall and power bank are huge. We are talking 80% plus, and this is without even trying. However, I don't think we can expect their energy business to be running on all cylinders by 2025, mainly because of battery production constraints. If we take Tesla Energy into account, I believe we should increase ARK Invest price predictions with 50%. In my opinion, ARK Invest is sandbagging their price prediction for two reasons. One, they are not taking into account the energy side of the business. Two, they are using a low multiple. Rather than trading at a forward price to earnings ratio of about 70, they are using a 35 multiple. This is very conservative and basically cuts your price prediction in half. I believe next year they will upgrade their price targets once again. As promised, my personal price prediction for Tesla. I believe in 2025 Tesla will be valued at $6,000 per share. This is actually quite in line with ARK's Golden Goose scenario from the previous year, which was $4,400 per share in 2024. People highly underestimate how fast Tesla is executing their plans. They are growing at an insane pace, continuously and meaningfully improving their products while becoming extremely efficient. To me, a perfect recipe for exponential growth. If you want to see more stock market videos, make sure to subscribe and turn on the notification bell. Thanks for watching, have a great day, see you next time.